I grabbed the guy in my dream.
The devil's eyes.
Happy Halloween.
Happy Halloween, folks.
Listen, oh, go ahead.
Yeah, whatever you do, what?
Whatever you do, don't fall asleep.
That's right. Just because we're coming live doesn't mean it's time for you to fall asleep.
Yeah.
Hey, listen, we're Bill and Brian with Energy Rogue. We're going to talk a little bit today about, what are we going to talk about, Brian? The 5 reasons why crude
We're
and
going to
gas
talk
prices
about the
will
5
rise.
reasons why crude and gas prices will rise in 2025. It is the end of October, which is bridging into planning sessions for 2025. As people are closing out the year, a lot of people are looking ahead into the year to see what is ahead. And there is a lot of bearishness out in the marketplace on crude and natural gas. And this is the reason why we wanted to pose these questions and pose these thoughts and kind of talk about those into the ethos, because these are important issues. These are happening as we speak. And this is not something that is going away. And there are many people out there that are just not really. Oh, go ahead.
So, Brian, so what you're saying is that crude and gas prices will come back from the dead? Is that what you're saying?
You ever feel the prickly things on the back of your neck?
Yes.
And yes, it could be coming back from the dead. I overrode your clip there. So we'll insert that a little bit. But yes, back from the dead. And let's go ahead. How about we talk about this real quick? So natural gas. Oh, go ahead.
No, go ahead, man. This is it.
All
You
right.
got your charts up. Let's go.
All right, so natural gas and crude oil both have come off from October highs. At the beginning of October, both crude and gas were at a much, much higher level. Gas has stabilized for the December contract. We're looking at the December contract. The November contract settled all the way down here, all the way down here. So in the 230 level. And we are hanging around the 280 level. We've got particular price targets in there. If you want to learn about those, you can join our service, which you'll learn more about later. Crude oil is having a little bit of a troubling point just south of $70. And there is a lot of bearishness out in the marketplace. So, so the thing is that when this month came around.
Happy Halloween, Michael.
So that's what we're looking at. There's a lot of bearishness out in the marketplace. So what we wanted to do is provide a different, as people are coming up with budgets for 2025 and their plan for 2025. If you're a producer, we have one set of strategies that can be utilized, and it is in the link below on our Netback Accelerator. And if you are a consumer, there's a different program for you, but you're going to have to reach out to us directly. So on the producer and consumer side, those are different strategies for 2025. And employing these strategies doesn't change your business, but it could easily bring 10 to 20% to your bottom line. And if you're hedging your business, if your business depends on that, then staying in tune to what the market is going to hold, and whether or not we rise or fall, you should be prepared, because one thing is for certain. In the month of October, we probably had a 30% volatility on natural gas from peak to trough. And on crude oil, we probably had a 20% volatility. So you can, in 1 month, 1 month out of 12, we had 20 to 30% of a value shift. And whether you're a producer or consumer, those are going to have different things. But we are going to cover today the 5 reasons why crude and gas will rise in 2025. and brace. You got to brace for the seismic shift. These are happening out in the marketplace, and these are critical factors that you should be watching, especially if your business depends on the price of oil and gas. Did I
You
miss
should be
anything
watching.
there?
Yeah, you should be watching this and having discussions within your company about how you're going to respond to these and how you're going to get ahead of them or change your course because of them. So, you know, energy is probably one of the most expensive things that manufacturers do. It's one of their most expensive costs. And so the more you understand about it, the easier it is for you to be able to react to some of these and to respond in the appropriate way that you need to make your business continue to grow.
Yep.
Let's hit them, Brian.
All right. So imagine if you not only knew the direction of the markets were headed, but also why. Why oil, why natural gas, why other key commodities are poised to rise or fall. That's the kind of insight that can transform your trading, hedging, and business strategy. If your business depends on the price of the commodity or it consumes the price of the commodity, not understanding where the markets are, but where they're going and why. Why is the key question. And every day, Bill, is that why the same thing yesterday as opposed to today?
It never is the same, to be honest with you. If you're getting their information that says the why is one thing and it's the same thing all the time, unless they're saying weather, it's a different why.
Yes. So, crude oil. Why would crude go up? What are the key reasons that crude oil will go up, Bill?
Well, demand's either got to go up or supply's got to go down. That's your two big fundamental things that are happening.
Okay.
And all that happens based on what happens in the world. And
Yep.
so that's where your geopolitics come in. And then it depends on um, the the traders. You know, they like to think they've got control, but they're usually just responding to something out there. And so that's what they do. Now, whether or not they respond the way we want them to, that's a whole different story. But they are responsive. So I mean, when you talk about supply constraints, you know, there's not a lot of people as crude oil begins a little bit of a march down right now. It could cause some people not to drill. It could take some of that off the table, and that means your supply constraints happen. There are other things that happen supply constraints, but we'll get to that in on that number 3 chart.
So in our platform, we actually cover supply and supply constraints, and we actually track these trends every single week and what that is looking like. And if you just look at the projection and the trajectory, we've actually been building a little bit of supply here in the US each month, but adding 30,000 barrels a day each month, is that a lot? At
No,
30,000 barrels out of
30,000, yeah, 100 million barrels. No,
100 million barrels. So the supply, many people look at the supply in the US and yes, we're at 13 million barrels a day. Let's take a look at the most recent week. We're at 13.5 million barrels a day. Guess what? It took us over a year to get from 13.2 million barrels a day to 13.5, over a year. So the thing is that many people are looking at supply and looking at growth. Brazil has phenomenal growth. That has had phenomenal growth. Guyana added a couple 100,000 just in the first quarter, but that growth curve is over for 2024. They're resetting the table for 2025. Venezuela, Iran, these have been growing, but at a much, much lower state. Outside of the barrels that Saudi Arabia has constrained from the market, there's not supply growth out there. So
and part of the thing is that they're finding supply, but they don't have the infrastructure to get it to market. So it doesn't matter how much reserves you have. If you can't get it to market, it doesn't matter.
Yep. Asian economic powerhouses. Another reason that crude oil will head up. Asian economic powerhouses that China returns to a growth pattern. They've stagnated this year. This year was a stagnation. So if you go all the way back to COVID, COVID was a supply demand typhoon. What do you call that? Perfect storm. It's a perfect storm of a supply shock and a demand shock happening at the same time. So um so then if that was COVID year, 2021 we started rebuilding. 2022 was really the engine. 23 was the completion of that engine. 24 was the leveling, and we were facing a very big economic headwinds as the economic challenges. What was it, Bill? Didn't you say that it was postulated that we've been in a recession since what
Oh
was
yeah,
that?
since November of 23.
That we've been in recession for almost a year.
Right.
So if we return, if China returns, which is an if China returns, India has been growing like crazy, so we don't
Right.
have to worry about that growth. Now, on an absolute demand basis, China dwarfs India from their growth patterns and how many barrels that actually takes. But those two, so supply constraints is number one, which most markets need a higher price point to really add supply. So outside
Right.
of Saudi Arabia and OPEC Plus's cuts, there's not really a supply engine that if the economy, a global economy takes off, we're ill-equipped. Geopolitical tensions, this is going to change week by week or day by day. If you just look at the price of crude oil from Friday of last week to Monday of this week, you will see a tale of two stories, and there's a reason why. Has to do with geopolitics. So every day you've got to watch that, right?
Right. And if you think you know what they're what other people are thinking on geopolitics, you're probably wrong because no one seems to know what some of these guys are thinking.
Right.
And going back to the demand, Brian, what's interesting about India uses about 5.5 million barrels right now. That's their demand right now.
Okay.
And they expect by 2030 they'll have a steady growth and get it up to almost about 6.7 million barrels
Wow.
by 2030. So it's going to be a steady growth. Now, here's the part that people don't understand. When you and I see India as a developed nation, but in the undeveloped nations, what you see as they get more energy, their demand does not go up at a steady rate. The demand goes up and takes a hyperbolic curve up based on how more they get used to having that energy. And that's something I don't think anybody's planning for or preparing for when you consider that we're talking about 3 billion people in the world who need that kind of energy. So just that
Well,
those demands can come back to bite you pretty quick.
well, India is probably where China was in the 1990s.
Right.
And
But there's a difference. The
there is a
difference is in the
difference.
cultures.
Yeah.
And that India has a middle class where China did not.
Yeah.
And the middle
Yeah.
class is where all that growth takes place.
Yep. So, are you just listening to headline news? If you're just listening to
Headline
headline news,
fundamentals.
if you're just looking at headline news, a lot of these variables are going to get caught into an ethos to where you're not really going to understand why the market moves up or down.
Well,
So
Brian,
now,
I used to say that they sold things. They tried to sell papers. Now they try to sell clicks. When you look at the headlines, what they're trying to do is get you to click that headline because they want your eyes.
you
And
know,
so
we got a great compliment from Nathan Hammer this past week. Was that this week or last week?
this week, yeah, it was on
Yeah,
Monday.
this week. So Nathan, if you're listening, hey, Lacour, if you're listening, hey, um, he said, well, one thing that's interesting is we're shifting to more what we talk about independent analysis of the global landscape, and that our news sources and our ethos of understanding markets and whatnot is shifting, and part of that shift is what we're doing with Energy Rogue. So we're excited. We're bringing unique thought processes to the mix There are many times that we don't match up with what this headline news actually means. And there's a reason why, is because we are looking beneath the surface. So when we look at
I like that term, unique thought processes.
unique thought
So
processes.
that's what my brothers were really saying when they told me I was crazy and I was having unique thought processes.
It's a fancy, it's a fancy way of saying it.
I think your brain is a thick candy shell.
You're
Sorry, had to.
There you go.
All right. So we've talked about crude oil, why that's going to go up. Now let's talk about natural gas, why that's going to go up. Winter weather patterns. And if we look at the winter weather patterns over the last over the last year, one thing that you will see, especially when we get into the demand side of the equation, and this is inside of our Rogue Premium, you will see that despite having higher highs this past winter, this is residential and commercial consumption, what you'll see is that this is thinner than this, and this, and this. So the last couple years, the last 2 years in particular, have been paltry demand. And if you look over time, the width of these, the duration of winter used to be a lot longer. And this past 2 winters hasn't really been there. We are starting to sneak up, and there are calls for a solid winter. If we have a solid winter, and solid meaning normal, the past 2 winters have not been normal. If we look at last winter in particular, outside of these 2 weeks, we did not really have a winter. Most
Right.
of
We
the
did have enough
winter
cold
period.
weather.
Yeah. Most
And
of the
when we're talking
winter
about
period.
a solid winter, it's cold weather for an extended period of time.
Yep.
Just like when we say have a hot summer here in Oklahoma, we talk that as how many days over 100 do we have consecutively? And in winters, how many days below freezing did you have consecutively? Which, by the way, would bring up the point, Brian, that there's a place that can find all that stuff out.
Yes, there is. If you go to 𝐒𝐤rogue.com, we do have a product over there. It is actually encapsulated inside of our Rogue Premium product as well. So we keep track of that. Right now, WX Rogue is free. So watch it, because we cover cooling degree days, heating degree days, and gas weighted degree days. So
what you're saying is that we could have a winter weather wonderland in Wisconsin.
actually, because of our because as part of our service in Rogue Premium, we actually have a dedicated Rogue channel, and Brendan is our resident weather expert, and he posted a video this morning that is about 15 minutes long and covers what is happening on the weather, and he actually just put out his winter forecast. I'm not going to spoil that because I'm going to keep that for our paying members. So if you're curious about it, you can join Rogue Edge and Rogue Premium, and you'll learn a little bit more about that a little bit later. Natural gas price goes up. Winter weather. If we have winter weather, the past 2 winters, we got off easy. Supply growth. There's been an overestimation of supply growth. Let's take a look at the supply side. If we look at the supply growth, many are caught thinking about what happened in late last year, where we went from 102 to 105. That's not going to happen again. And the reason that we know that, if you look at what's happened since that time, this is what's happened. We dropped as part of the natural cycle, plus natural gas prices were in the toilet. We now have started a completion process that I expect will kind of taper off around the 103 BCF. But the reason that we know this is because when we look at the trends of what is happening on the supply growth, we are starting a process. We've been in base decline. So if you look at every basin, we've been declining. And that's the reason that you had 105.8 BCF in December, and we're at just shy of 103 BCF right now. Now, our trajectory is pointing up. So we are expected to start that supply growth, and I expect that to happen in the fourth quarter. But that growth estimation, it's overestimated because many people are projecting a 3 to 4 BCF a day supply addition. And that is just vastly overstating that based upon the rigs at work. Lastly, LNG export boom. 5 to 7 BCF a day of capacity is going to be opened up out of the US in 2025. It's already started right now with Plaquemines. And what is happening in North America as opposed to the US there, Bill?
The North America as opposed to US. Are you talking about the Canadian
And
Mexico? Both. Both are opening up LNG facilities. And I think the Kitimat is going to be what? Just shy of 2 BCF a day.
I think when
able to
it's
ship
full
out of?
rate, it's 2.5. And I think their first runs are probably going to be just shy of 2 BCF.
Well, they are already starting to put gas into that, I think, beginning
Right.
of the fourth quarter.
Yep.
And then Mexico's, I think it's 1.5.
Yep.
And both of those are planned to come on in 2025. And so that means that gas that we are getting from Canada should see a slowdown, and gas that we are shipping to Mexico should see an increase.
So
let's say
let's do some quick math. So we are going to add, let's be conservative, 5 BCF a day in the US of LNG export capacity, right?
right.
We are going to subtract 2 from Canadian imports. And we're going to add 1 to 2 to Mexico exports for their LNG. Add that up. What does that do to 100 BCF a day market? You got 2, 7, and let's call it 1. 8 BCF a day. 8 BCF a day on 100 BCF a day supply demand mix. That's massive. That is going to be tremendous, and that do not underestimate that, because that is happening. So those are the 3 reasons.
Brian, we do have to mention there are some people out there right now who on the supply growth who look at saying there's a lot of gas behind the pipe ready to come on the minute the price gets to a certain point. And I will agree that there are some out there. I just don't think it's a significant amount. And we can argue a lot about how much is sitting there behind pipe ready to come on.
Right.
And I don't think that it's going to be significant, mainly because the minute that comes on, they drive the price down.
Yep. Well, I mean, the leading indicator is going to be rigs, and what we have seen in active rigs is that we have continued to go down and down and down from our peak, which many people are realizing they've seen supply growth during 2023. The reason why is because of all of these rigs.
Right.
That's the reason we had supply growth. What has happened since that time? We have dropped, and all that growth engine has gone away. So until that growth engine comes back, which needs price, and the prices simply aren't there to add rigs.
And the other thing is that when you see new wells decline faster, so as new wells come on, decline rate increases, and so we see more decline. And that decline rate is the sneaky thing that sneaks up on people as far as saying, well, wait, why aren't we having more? And it's because our decline rates are so significant that it takes quite a bit. What do we determine? It takes at least 400,000 a day of new gas, 400,000 to 600,000 a day of new gas, just to keep up with decline.
Well, actually, fortunately, there's a chart for that.
There's a chart for that.
There's a chart for that. Let's look at the crude oil decline, new wells. Here is the natural gas decline. We decline at a rate of 3.4 BCF a day every single month. So that means we need to add over 3.4 to actually add molecules. We currently are producing at just shy of 3.2. So every month we're losing a little bit of headway. That said, that trend is moving up, which is why we expect supply growth in the fourth quarter. So, but that is a drastic overestimation of supply growth. So winter weather, supply growth, LNG exports, all of those point to higher prices. Do you keep track of these? Is your business impacted if natural gas goes rapidly up or rapidly down? What's happened over the last month? If we just take a look at what has happened to budgets, and let me change this to a day chart. Or actually, you know what? I'm going to go to ours because I like ours better. There we go. And right down here. And so if you went from $3 down to this 235, so you went from $3 down to 235. If you're a consumer, that's great. That's fantastic. If you're a supplier or a producer, that is not good. And how to be positioned, there's a way to position yourself to where you would not suffer the consequences of that drop down. But that is a topic for another day. But are you keeping track of these? Is your business impacted if natural gas goes rapidly up or rapidly down? These are
For that
important
matter,
questions.
you could be building a correlation with your business needs and these prices, begin to see how much it does affect your business.
Yeah.
And we can help you with that.
Yep. Now let's talk about NGLs.
What's an NGL, Brian?
A natural gas liquid, as opposed to LNG, which is liquefied natural gas. Natural
Okay.
gas liquids are what comes out of the ground with natural gas and is separated at a natural gas processing plant. And we actually have a course down below with our partner, Reese Energy Training. And you can go there. It's Reese Energy Goes Rogue. And you can learn about natural gas processing, natural gas basics, and we are recording a third course at the moment. But what are the 3 reasons why NGL prices would go up, Bill?
Well, first of all, they're going to go up because we're exporting some of that. We're exporting a lot of ethane, if I remember correctly.
Yep.
And we've seen ethane grow quite a bit. And so you're going to see the prices and realize that NGLs are priced by product. When you price them out of the gas processing plant, it's priced as a Y grade, which got all the products mixed in. But the price of the Y grade is based on the individual prices of the ethane, propane, butane, and condensates.
Look
And
at those
so,
exports. Look at those
yeah,
exports. That's
going
ethane
up crazy.
exports.
And
And
why?
how about
The-
this? Propane exports.
yes,
How,
propane is one of the things that's going. So why would propane export? It's because it's going to developing countries that don't have infrastructure because you can truck propane.
the one thing that hasn't changed that much is isobutane. There's another reason, but we're not going to
It's
talk about
yeah, yeah.
that. But if you look at butane, you look at propane, you look at ethane, exports are continuing to grow year over year over year. Plastics demand, that's another reason. Global plastics consumption is rising, and it continues to rise, boosting the need for ethane, propane, butane. Not so much propane, but you get the point. Natural gas liquids are going to be growing with it. Propane is used in various locations for heat, for
Right.
storage, for barbecue, for multiple things. And if you look at the demand for propane and butane over the last 5 years, we've gone through a shift, and that shift is returning back to pre-pandemic levels. What, like I said
Right.
before, we had a supply shock, a demand shock, all at the same time, and we're now years away from it, but the impacts of COVID are still here. So we're emerging from that. So,
And the other thing to remember is when you see global oil numbers as far as how much volume it is,
mhm,
these numbers are counted as part of the oil numbers.
right.
So, and that, a lot of people don't realize that when you see oil, it's not just crude oil; it's crude oil and all petroleum liquids is how they look at it.
Yep.
So when you see a number from OPEC, it's going to include their liquids.
And we are accepting questions, so feel free to pop questions in there. As a matter of fact, do you know what ethane rejection would do to NGL prices? Would that shift natural gas liquid prices up or down? I want to hear from you if you're listening in live. So, would ethane rejection, which is a natural gas processing plant function, would that increase or decrease NGL prices? I want to hear your thoughts on that, because I know my opinion now, but I want to hear from you. I want to hear from you. So if you're watching live, tap it in there. Financial market recovery. As Bill said, we're 10 months, 11 months into a recession.
Yeah, yeah.
So
At
let
least
me
at least in the original evaluation of recession, we've redefined recession so many times it's hard for people to understand it. But
let me ask you a
so
question. Let me ask you a question. Since November of last year, what has happened to the stock market since November of last year?
look at that.
So
That doesn't look like a recession, Brian. I wonder why.
there's a reason why, and that has to do with currency, and that has to do with inflation, and that has to do with a lot of other factors that we're not going to dive too deep in today. But if you're curious about that, as you should be, then you will realize that the reason that we keep going up is due to inflation. Everything outside of oil is headed up. Gold, stocks, uh, prices on eggs. We've heard prices on eggs, prices on bread, prices on beer, prices on everything is going up. Oil prices are actually stagnating as costs everywhere else are going up. So now we'll get back to the supply side thesis. Well, supply is going to keep growing. The Permian's going to keep growing. Well, what does basic economics say? What does basic economics say when your costs increase and your revenues drop?
Wow, that sort of squeezes you a little bit, doesn't it?
Yes. Yes, it does. So oil prices are lagging from the overall market and really undervalued at relative to the costs and the utility that it has in play. For example, I heard this analogy the other day. Oil has gone from, say, $100 a barrel, or let's call it 90, down to 60, 90 to 65. That big drop, right? 1/3.
Right.
So 1/3 of your valuation has gone up. How come the feedstock to paint, which is predominantly made from crude oil, how come that has doubled in that same time frame? Explain that one.
Yeah, really.
I mean, the fact of the matter is that people that are capitalizing on the spread between the refined product side and what the ultimate product is, are making out like gangbusters. Not the refinery,
Right.
because crack spreads haven't been cooperating, but lagging oil prices are going to come to roost, and that is going to come to roost with supply dropping and with demand increasing. Economic growth, that we return to it, and that we have a correlated market recovery and rebound. Where do you get your financial info? Are you getting the full story? Where do you
go
get
back to
your info, Bill?
does it go back to headline news? I mean, I try to search everybody. I'm more of a contrarian. I try to search everybody that nobody's really paying attention to. You know, I guess I'm sort of worked on that theory. Even a blind squirrel can find a nut every now and then. But the other thing I look for is, man, sometimes you have to pay attention to what the rich people are doing and not what they're saying, because you'll find those are two different things.
What are they
So,
doing?
and so,
You baited that. Yeah, I'm hooked.
well,
What are they doing?
I see them investing in a lot in energy. And when you start looking at the tech giants, they're not invested in renewable energy. They're invested in nuclear and natural gas.
Hmm.
So, I mean, it's always, I had a friend one tell me one time, he says, I can't hear what you're saying because your actions are speaking too loud. So,
Speaking of the new normal in energy markets, the COVID impact, the pandemic has permanently altered global supply and demand chains. And
right.
these changes are influencing and continuing to influence energy dynamics in the marketplace. Localized demand. There's an increased focus on local production and consumption. This is what's interesting, especially with the US's position of increasing exports as localized demand becomes a key component of growth for countries such as Nigeria, right?
So
They're what are they doing in
they're
Nigeria right now?
building their own refinery because they got tired of paying up for the refined products. And so they find it was cheaper to go to get the oil and refine it themselves to get the refined products, being gasoline and diesel.
Right, right. Then
And in fact, that
technological
you saw China do some of that. They were buying crude oil when it dropped below $70. They started buying crude oil and started exporting refined products
actually
because they have
their
the
refining
refining capacity.
capacity. Well, their refining capacity has, I think, matched to the U.S., hadn't it?
Yeah, they've got a lot of refining capacity. And
So
so what they're doing is they're playing that arbitrage and realize that they're a little bit different because of how they're set up with their government. They don't necessarily have to pay attention to any market rules inside their country.
right, right. Technological
I say that
advancements
nice
such
enough.
as what's that?
And China, if you're listening, I said, did I say that nice enough? China, if you're listening, I didn't mean to offend you.
Oh my gosh. So technological advancements are the last reason that there is a new normal emerging in the energy production and consumption side. And these advancements include the EV market, the renewable market. And I do want to say, as we talk about natural gas and where those investments are, if we just look at natural gas, or let's go to power. If we look at the power consumption and you look at this chart, this green is how much power we get from natural gas. So this is natural gas. This is nuclear. This down here is coal. Now, coal still represents over 15% of our power stack. So the key question when we have climate initiatives are, why are we doing this still? It has to do with economics. It also has to do with the power dynamics. And there's a reason why, and I'm not going to bore you with it right now. We can do that on a different one. If you let us know in the chat, we will do a session on that. So what is the new normal? It's changing, and that change is
Right.
here today. It is changing.
Actually, yesterday. Yeah.
Yep. Okay. So now we've talked about why prices will go up. Now, what are the risks? Risks include an economic slowdown, that we continue to have a slowing of China's growth. Well, of the
Right.
economic slowdown that we've experienced over last year, that continues, that China emerges from a period of growing 6 to 10% a year to more a mature economy, which is maybe 3 to 4%.
Right. I think that has more to do, once again, back with their politics, is they can only grow as fast as they allow themselves to grow. And right now they're dealing with a housing crisis they got to figure out what to do with. I think if they get beyond that, we might see a little bit more deal. I think they could get back up to 5%, which
Okay.
is significant growth for them.
Yeah.
It's more than
Well,
what
I
we're doing.
mean, most of the global growth on energy consumption comes from China, but as we talked about, India is going to be a big portion of that.
Yeah, the silent demand.
The silent demand. Mild winters, that's
Right.
another risk to the price increase. And that we have an inflation decoupling, that oil prices lose their historical inflationary bias. Oil used to be an inflationary hedge, but as we talked about earlier, stocks went up, oil has come down, and that is at a time where increasing money supply, which should increase the valuation of oil versus the US dollar. There is an interesting dynamic that COVID has unlocked, to where the oil prices has separated from that historical inflationary bias. And the market is still trying to figure that out, by the way. So
Right.
every day, the energy market is impacted by countless factors: supply constraints, geopolitical issues, economic demand, and seasonal trends. So, what is your challenge? Getting a clear picture of these moving parts and understanding how they'll affect the market in the short term and the long term. And we have a product that helps give you that clarity, and that is Rogue Edge. We, as part of Rogue Edge, we just recently launched a newsletter that gives you this convenient bull bear bias of the market, so that we look at fundamental factors like crude oil, we look at commercial stocks, oil and product total stocks, production, demand, exports, international. We do the same on natural gas. And so Rogue Radar gives you not just the data, it's about giving you the insights to stay one step ahead. And if you join us, here's what you're going to get: you're going to know the market direction. And the market direction may be illogical. So with Rogue Edge, you're going to get support and resistance levels, making it clear when those trends are shifting. You're going to understand the fundamentals. We have predictive models, daily emails, weekly PDFs that make the complex fundamentals easy to grasp. We also provide perspective on why the markets are moving. For example, there are many times in the market that you see supply grow and demand stay the same, which is a bearish bias, but the market goes up. And conversely, when supply goes down and demand stays the same, I've seen price drop, and those should be inverse. But that's what we provide with Rogue Edge. Here's exactly what you're going to receive. You're going to receive a short, actionable daily email with daily support and resistance levels. You're going to get a weekly outlook, PDF market reports, such as this right here, which is going to give you an idea of whether or not we are bearish, whether or not storage is in a bearish place or a bullish place, whether weather is in a bearish or bullish. And we give that weekly roadmap with PDF reports during the week. And at the end of the week, we cap it off with a weekly deep dive video. That is all only $89 a month, or less than $3 a day, or a latte or something. If you buy a Starbucks every day, but your energy consumption or production is providing millions of dollars of swing in your bottom line, consider investing $89 and get insight into what those market moves are happening.
So what you're saying, Brian, this is going to give you an advantage that is not necessarily dependent on what everybody else is saying.
Yes.
Sort of like a rogue edge.
Yes. It is going to give you an edge. It's only $89 a month. And if you are interested in going even deeper, we do have different price plans, such as our Rogue Premium, which a lot of people do skip over Rogue Edge, go straight to Premium so that they have access to our daily Discord channel where we provide daily videos, and we provide these every single day. That gives, this was a 9-minute video. We cover what is happening in the markets, what is happening in the news. And that is for somebody that is really, really serious about the energy markets. That is only $179 a month. That gives you access within 10 minutes. You understand everything that you need to know about the energy markets within that 10 minutes. And then Rogue Edge is going to give you the benchmark and the basis to understand where the market is heading and why and how that's going to impact your business. So if you want to, if your business has volatility around the energy markets, have knowledge, clarity, confidence, and Rogue Edge is only $89 a month. So, hey, Richard, good to hear from you. Afternoon, good to see you. And listen, I got some stuff working for you. So I know I'm quiet right now, but I'm working behind the scenes. I should have some feedback for you soon. So what are the recap of the reasons of the top 5 reasons? Crude headed up, natural gas headed up, natural gas liquids heading up, financial market recovery, and that we have a new normal. And if you would like a copy of this presentation, you can email us at rogue, that's ROGUE, at energyrogue.com. And if you email us, we will give you a copy of this and just say, what are the 5 reasons that the market will go up? So, yep. And you got it, Richard. I'm excited to do that project with you. So these are the 5 reasons. If you've learned anything today, drop us a like, drop us a comment. All of that really helps us. So drop us a like, drop us a comment. If you're serious about the energy markets and your business depends on it, consider subscribing to Rogue Edge. It's only $89 a month. And with that, you will understand the energy markets every single day. So
like, comment, and subscribe. And if you can't even subscribe to Energy Rogue, be sure to subscribe on YouTube, and that helps us all the time.
Yep.
Hey, I'll tell you what. I can get a good look at a T-bone by sticking my head up a bull's ass, but I'd rather take the butcher's word for it.
So anyway, we got to do some Tommy Boy, but it is Halloween week, which means lots of
Happy Halloween, Michael.
Lots of scary movies, lots of fun, lots of candy. Make sure that you're safe, make sure that you're kind, and make sure that you have a great Halloween. So I think that's all we had out there. Is that all we had?
So I think it is. Just one quiet reminder.
You shouldn't have buried me.
Yes. A lot of people think the energy market is dead. It's not dead.
Yeah.
And so
It's not buried.
Nope, it's not buried. So listen, thanks so much. Reach out to us if you think we can help you. If you think Rogue Edge it provides you a good anchor that will provide you a unique perspective on the energy markets delivered to you every single day. So come join us. Would love to see you. Thanks for listening. That's all I got. Any parting words, Bill?
Let you guys have a good weekend, Halloween weekend, and hey, listen, be safe out there. Oh, also, go vote. Listen, by the time we come back next time, well, we will have had an election. We may not know who won. It takes forever to count these things anymore.
I guarantee we won't know.
But go vote. I don't care who you vote for. go vote. It's one of the few privileges we have in this country that are still out there. So go out and get your vote out and let people know how you think. If you don't vote, don't complain to me because I'll get upset.
Absolutely. So thanks so much for hanging out with you, and we will talk soon. Just wanted to give a good shout out to Wood River. Thanks for tuning in, and I will be talking to y'all soon. So thanks so much, Wood River.